Well, the Fed rate decision definitely pushed the market back into a downtrend, but is that going to continue? Riz and I are going to discuss it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. This is Chris with Riz International, and I have the man himself. It's Riz. How you doing this evening, Riz?
Doing well yourself?
Oh, I can't complain. It's another beautiful day, any day above ground, and a day that we can have a webinar is a good day. So let's take a look here at the S&P 500. So, starting the week there, or actually ending last week, there was a bit of a push here. We got up to 3,900, which was quite impressive, considering that we started the week off right around 3,800. So a huge move in the S&P 500 last week, moving into the close. Then there was some trepidation before the rate announcement, and then the rate announcement happened on Wednesday. And if you were watching this live, it was actually interesting because after the Fed announced a 75-point basis hike, just like we predicted, the market went up quite a bit. And then the bottom fell off, and we started the tank pretty hard, and Thursday was no better. Now, Friday was a very interesting day with a lot of uncertainty. Riz, what are you seeing here as we move forward? Do you think we still have more downside, or is this a signal that we may start having some recovery?
In the grand scheme of things, I do believe that look, we there is some more downside overall in the market. We don't know when the floor where the floor will be or when it will come, but I do think overall there is some downside. I don't think 3600 area and where we are right now, nearly at 3800 is not the kind of bottom, right? I'm not saying that we're gonna get there all at once in a clean downward break, but I don't think that this is the bottom of the market, right? If we compare it to March, April for 2020's drop, that was a very different drop, very different market environment. And then if we go even further back, we compare it to 2008. That was also a very different kind of drop, and that was also that took about a year to find the bottom, and that was in March 2009. So these things can take some time, and you can see that. Yep, March 2009 was the bottom in the 2008 financial crisis for the market. At least the economy took a while to come back. That was a very different situation again. So the reason I make these parallels, not because it's going to be like that or even like the COVID crash. Very different circumstances, very different markets, very different economic situations. Um, but what we can say from that is that we don't know exactly when the bottom will be. And because every situation is different, we have to take what we're going through in its own right. And as a result, what I can tell you is that this drop is already, this pullback, we're, 11 months in. So I think, Chris, when was the last, when was, so yeah, January was kind of the high, um, right? So we've been at this in this downtrend, as Chris has kind of outlined for us with that light blue downward trending line. And we could see we're down about 22-ish% from the peak. I don't think that this is it for multiple reasons. One, interest rates are still being increased. Now, of course, the reason we saw a lot of uncertainty is because of a potential slowdown in rates. But that doesn't mean we can't and we won't see another rate hike, in December. I Right now the jury's out for that, but I do think that we could see a smaller one. I don't think we're going to see a 75 basis point rate hike unless something drastically changes. And the next meeting is, I believe, December 13th. So maybe mark that day in your calendar as well. December 13th. So just a good 12 days before Christmas. So either the Fed is going to make it a really good Christmas, or it's going to get a horrible Christmas for those of you that celebrate or not. Otherwise, it remains to be seen. But coming back to what I was saying, this is more of a drawn out, longer pullback, right? This is taking quite a bit longer than pretty much everyone's anticipated. There's two sides of the camp always: crash or massive rally. But the reality is that we are in sort of a downward trend, as you can see, and that trend is not a clean downward break. It has multiple individual rallies that you can see. This is why we trade. It's been a great time to be a trader. It's difficult, but this is a trader's market and has been all year. And I see that continuing um, throughout this year. Next year is a little bit too early to call, but that gives you some perspective as to how to navigate and maneuver this market. I continue to say for the large caps, solid companies, whatever money you have, whatever you're able to risk, it's not guaranteed, but if you buy solid large cap companies, you should know them by now. If you've been following me on social media, you are in Elite, obviously, or if you're not in Elite and you're a subscriber watching our videos, you should know by now the kind of stocks I gravitate towards. So I'm not going to keep repeating myself on the specific companies, but I will say if you have the time frame, you have the ability to carry, do not shy away from taking advantage of this opportunity because this is where the money is made. This is where, the opportunities to change your financial future. And maybe you're thinking, Riz, I'm doing pretty good, financially. I'm like, that's great. But don't rest on your laurels. You can always do better. I can always do better. Um, and that's really what humanity is all about: doing better, being better, right? Otherwise, we never would have left the caves. So the point of I'm trying to make is don't fall for any one side. Don't be biased in being bullish or bearish. I pretty much take it day by day, and that's not a good thing to say from a a trader standpoint because everyone wants to scoop, quote unquote. Everyone wants to scoop. Everyone wants to know where the market will go. But if you know anything about me, you know that if I don't genuinely believe it, if I genuinely don't do it myself, I will not. I will not condone it. So I do not know exactly what the future holds. No one does, right? So I can't feel too bad about that.
Well, Riz, I'm not sure. Never actually met in person. You might actually still live in a cave. I mean, sometimes I kind of question that. How much you keep an eye on the markets. But give me an idea here. Friday, there was so much uncertainty. We were up and down, and we just
Yep.
ended kind of flat. What was going on Friday?
Yeah, it's kind of a little bit of a dip buying. We saw a massive uh we saw a massive pullback, on rate decision day on Wednesday. If you take a look, besides Friday, the entire week, the 4 trading days before was red, so you know, uh, it's very difficult to say exactly why because there's many different things going on. Um, but I would say it was a little bit more of a dip buying situation. It was market got very oversold very quickly on a shorter time period, right? Uh, so it's something to just keep in mind. I feel like that candle itself says a lot. Like that's what we call classical definition of a doji, right? For those that don't know, you can see the massive tails, or the wicks up and down, and very very thin body, that which is the open and close, and it kind of looks kind of like a cross, right? Looks kind of like a cross. So it's very interesting price action. Friday was kind of a day where, or yesterday was kind of a day where I was just like, okay, there's not much going on. I can't really do much, and I think that stands for pretty much the entire week. We didn't do too much. We did enter and exit. I did enter and exit. I believe it was Amazon. But other than that, it was a little bit of a slower week.
And that happens sometimes, guys. When you're trading and when you get more experience, knowing when the right time to get in and get out, when to just sit there and watch is so critical. That's where the money is made and lost, in my opinion. And so it's very important that you start to work on those skills and understand when you have a day like Friday, it's just kind of better to be like, okay, let's just let this sort itself out before we jump into anything new.
Yeah, yeah, I completely agree. Too much time is spent when it comes to traders trying to find setups and actually trade, and I get it, but not enough time is spent actually doing a self-assessment, a check, and being patient. Um, I think every single person in markets, in trading, and investing would be better suited towards being a little bit more self-aware and asking ourselves, do we need to take this trade? Yeah, you're going to miss some, but you will also miss some of the massive mistakes as well. It's like dodging a bullet. If you keep jumping around everywhere and getting in and out, you're exposing yourself to more risk. You're exposing yourself to more whipsaw and more potential profits. But like I said, nothing is guaranteed in markets, as we always say. And uh, by putting yourself out there, you want to be very careful. And every time you put capital in the market, you're putting yourself out there. So think of it like this way: if you are a commander of an army and you decide to, you know, sense part of your regiment, part of your army, uh, to another, front, another area. Well, guess what? You're risking them. And the analogy here is that army is your capital, your money, and you put it into something, anything. There's always a risk. It doesn't matter if it's Apple, Google, Amazon. There's always a risk, and not just company risk, but broader market risk. And all we can do is manage that risk and being accountable to ourselves, not trading when we don't need to trade. Period.
Well said. Well said. All right, let's take a look here at the breakdown for the S&P 500 so far this year. Obviously, we're down right around that 20% mark, like we outlined earlier, and most of the sectors, minus energy, are underperforming. I feel kind of like a broken record here, but we have seen some uptick in utilities and healthcare this week, even though the market was mostly down over since about the 20th. Nice little push up in that direction. So that's definitely getting some lift. Same thing for financials, starting to make a move back up a little bit. Real estate and tech really still getting hammered at this point. And as we mentioned, energy almost up 60% at this point. It's just insane in my opinion. But we had some big tech names report earnings this week, Riz. I thought we would see a little bit more of a push up here. What's your thoughts on that?
Yeah, earnings they were good. They weren't, catastrophic, as many might think. But they were a bit muted because we've seen that, you know, companies are being more cautious with their forward guidance, which is projections for what they think they could do in terms of revenue and profits, if there are any. So they're a lot more conservative around that. We've seen, many companies pull back guidance, meaning decrease their estimates for future quarters. We've seen many companies pause hiring and cut costs and slash some of their workforce. We've seen all these things happen. Um, but even then, the market is very, very much continuing to price in and factor in what future growth looks like in an economy that is and has moved away from zero rates, which real rates were pretty much zero over the last few years. In fact, this is the first time since 2008, 2009 um, that rates are benchmark interest rates are at this level, right? So even after we factor in high inflation, we still have negative real rates. If you take the current interest rate, which is, I think, what is it, nearly 4% or something, and you subtract inflation, you get a negative number. So real rates are actually still negative, but you know, nominal rates compared apples to apples, the rates in 2008 to now are similar. So it took roughly 14 years for us to get back to benchmark rates where they were. And you know to have asset classes unwind, for the froth to come out, we saw how fast it can happen. But I wouldn't be surprised if there's a little bit more to go. This is why I said at the start of the webinar that I do think there is some more long-term downside, but no one can predict exactly when, exactly what level, right, that we will go to. So that's why it's good hand in hand to, you know, uh, keep averaging in into great companies. I'm not saying going buy everything, but scaling in, because no one knows where the bottom is. And the last thing you want to do is, sit with a whole pile of cash thinking you're going to get the bottom, and oh yeah, wait till the crash, wait till the crash, and then it passes you by. Because I saw it roughly in 2008, 2009, because people never got back in. People never got back in because they kept waiting for the crash, even after 2008, which is absurd, right? The market dropped about 40% from highs at that time. And same thing with COVID. You know, the market dropped about 33, 34% in a span of a month or so, the fastest drop in the history of the stock market. And people were still expecting it to crash, which is absurd because we just had it. We just had the crash and they were waiting on the sideline. So every single time this happens, that's why it's best to keep increasing your exposure in solid companies as markets go down or even up.
Awesome. Thank you for sharing that with us. That's a really good insight. And yeah, it's one of those things we never really know where the bottom is. People like to say, "Oh yeah, it's coming. The great, like you said, the crash is coming." Blah blah, and then it never comes because, well, it already happened and they missed the boat. And so, really good advice, guys. Scaling in is a great way to start building really solid positions in great companies. And now is a good time to do it. Let's take a look here. Oil starting to make a move back towards the upside, making a bit of a push, especially here on Friday. Really big day for oil closing. Let's see here, right around 92.61 per barrel. So making that move closer to $100 per barrel. We'll see if we get there or not, but we do have the 200 simple moving average in the way. We've definitely broken out of this downtrend that we had on oil, and we seem to be making a pretty big push. This 85.50, 85.40 area seems to be holding pretty solid. There's definitely a lot of support and resistance there, but we managed rather to break through and starting to make a push towards the upside. Gold is still in its downtrend despite this huge run up on Friday, running right into my trend line there, which of course all of the market watchers here on our webinar knew that line was there, so that's where they stopped buying. I'm joking if you haven't figured that out. But gold's still on a downtrend here, even with this big push up on Friday, right up to 1680, just about to finish the day. Riz, are we going to see $100 barrel oil again, or do you think we'll kind of stay in this 90, 95 area for the foreseeable future?
Yeah, yeah. So this is a bit of a tricky one because we know that in the US, that the current administration has released oil from the Strategic Petroleum Reserve, and they're doing that to push down oil prices at the pump, and oil prices as a whole. But that hasn't been happening as much um, for over the last few weeks. So it'll be interesting to see if increasing that supply, taking money out of that reserve, uh, can actually make a dent or not, and crack oil prices lower. But by looks of it, it doesn't. And I think the market has factored that in. That look, okay, even with the reserve, what OPEC plus cuts in production will supersede any increase in supply that the U.S. can do via the Strategic Petroleum Reserve. So I feel like, yeah, I think we could see 95 and potentially 100, but I will say if it continues strongly, that bodes very badly for inflation, right? As you know, one of the largest components of an increase in inflation is energy, and traditional energy like oil. So it will be bad if we see the oil prices continue to go up. One thing we also know is that the U.S. dollar will also play into factor, as if we continue to see a strong U.S. dollar, that puts a little bit of a downward pressure on oil prices, and the inverse is also true. We see a weakening U.S. dollar, which it has weakened a little bit. Then we can see oil prices continue to rise.
Obviously, there's been all this talk about issues with power in Europe this winter. Discussion of liquid natural gas, things of that nature. Do you think that will play a role in the price of oil as we move forward, or is that something different entirely?
No, very different. Yeah, they're both energy. They're both forms of energy, different types of energy. The stuff that's happening in Europe with natural gas, we know natural gas prices tanked. Um, and they're kind of coming back a little bit up, but they got demolished the last couple months. So it's going to be interesting because the I believe briefly, and not a lot of people were talking about this, but European natural gas prices very briefly went negative, um, and that kind of reminiscent of 2020, and I think it was February or early March when oil prices went negative. So that's yeah, there we are, right? March 2020. I remember that day very very well. Uh, First time in history I've ever witnessed a commodity go negative, right? So people were actually pay you in theory. Didn't last for too long, but in theory, uh, you could actually get paid to take delivery of a barrel of oil, which is absurd, right? But yeah, fun times.
All right, let's take a look here at cryptocurrency because Bitcoin's making a little bit of a move here. We finally were able to push back over 20,000 and we held that. Looks like we retested here on Thursday. Friday was a pretty big day, and Saturday, yesterday, or today, depending on where you are on the date line, obviously is done as far as crypto is concerned. They started a new day, so it's been a bit quiet on the crypto front. No huge moves like we've seen in the past, but still starting to melt upwards a little bit, pushing through that 100 simple moving average. Looks like we got a ways to go before we get to 25,000. So I'm not ready to click the buy all button, but definitely an interesting development here with crypto, as it seems like maybe we found the bottom and we're starting to push towards the upside. Riz, how are your feelings on crypto at this point? I mean, I know you don't have a position, but what are your thoughts here on this movement?
Yeah, we long held that okay, this 18,000 area is very strong support. If it goes lower sharply, then it'll be really negative, but it hasn't. It's held up very well. This is kind of short-term bullish for crypto. But also keep in mind that what happens with the tech sector in the US market will also kind of impact crypto, as we've seen a very strong correlation between the two. When we see NASDAQ, when we see the broader US market, specifically the tech sector, like the NASDAQ area of stocks. Well, when it drops, usually it's not uncommon to see um, the broader crypto market, Bitcoin, pull back as well. But right now, it's showing some good relative strength. It's holding up well over the last a couple of days.
Awesome. Good to know. We'll have to see how that goes, of course, with the market moving forward. But I want to go ahead and open up the floor to questions for all of our elite members here right now. While they're typing, Riz, what are you looking at this week? I know you said that we haven't taken too many trades. Are we looking to take anything this week? Maybe. Is there something on your radar? Or are we still
Yeah,
going to kind of just wait and see?
very much so in a wait and see kind of situation. I'm not quite sure if I follow this, if I kind of buy this little Friday's price action. I think maybe we could see, you know, lows, go lower, maybe 3,600 area if I had to make a guess. But uh, who knows, right? I think we still have a lot of uncertainty. We got the Fed rate decision that we expected, 75 basis points. Powell and his lackeys said, okay, well, we might slow it down. We're not saying we're gonna for sure do so, but we might slow down the pace of rates. They never said they're gonna stop raising rates. They never said they're done. So that's something that's very important to understand. That just because they're slowing the pace doesn't mean they're stopping, right? So for me, I'm a little bit more cautious right now, post rate increase and the remarks. Uh, what is also going to be interesting is to see other economic data that's coming in the next couple of weeks. Of course, we still have about a month and a bit till the next Fed meeting. Uh, so I'm just looking at primarily keeping my eyes on large caps. I did get in and out of Amazon, um, as I said before. That was a quick trade. I'm glad that I got in and out of that one. And Yeah, keeping an eye on pretty much the large caps here. I already have quite a few decent positions that I'm holding already. So uh, let's see.
It's interesting you mentioned Amazon because Nick had his question come in. Google, Amazon, Meta. WTF. So I got Amazon pulled up since you were talking about getting in and out. What happened here, Riz? I mean, obviously, it looks like EP or earnings EPS was pretty
Yeah.
decent, but
Yeah. So
man,
these
it
are,
tanked.
yeah, these kinds of moves when we see it's very oversold. I wouldn't be surprised if we saw a bunch of funds, liquidating. I wouldn't be surprised that this we saw that the market's holding up, but primarily the market's holding up because of the energy sector. The energy sector is really carrying the market right now. Think Exxon, Chevron, all those kinds of things. So they're holding up the market. They're part of the market, not as big as Amazon and Apple and Microsoft, but they are an important part of the market. So they're holding up the market decently. And I feel like there's a lot of companies, I would say, sorry, institutions, hedge funds, there's endowment funds, there's pension funds. These funds are maybe decreasing their exposure, maybe taking losses or rebalancing as we head into uh, you know, I wouldn't say head into, but we still have, remainder of November. But as we get into the end of the year, right? Not all funds are going to do this, in the last week, okay, to, get the transactions done for the calendar year. Some of them start earlier. So, be very aware that if you see big drops like this, a complete breakdown, complete oversold scenario, like you can see Amazon's RSI gone way below the 30 mark, way beyond oversold. It's not uncommon, for this to happen. And usually we can determine that it's very much institutions dumping, right? I think even if you bring up Microsoft, let's take a look at that. Microsoft doesn't look that good either. Yeah, Green Day on Friday, but ultimately that too is kind of plummeting, right? Not quite as oversold, but again, dropping. Google, similar story, getting clobbered here. So let's look at that. It's Google's not going out of business. They already had earnings, weren't the most stellar, but still decent by uh, current economic standards, and very much oversold. And a little bit of a pickup from that point, but still oversold. Facebook, aka Meta, that's a that's a complete shit show. Um, has been and continues to be completely oversold. A massive destruction of wealth, thanks to Mark Zuckerberg and his fuckery. Uh, Again, I can't say I empathize with him, uh, but one thing to be aware of is one of the reasons Mark Zuckerberg kind of had to go down this direction. And I'm not justifying him for you know going all in on the metaverse nonsense, but really he had to do something. He had to take what's known as a moonshot bet, um, and it's essentially an asymmetrical uh, trade, if you really want to look at it that way. He's putting a significant portion of capital into this thing that could or could not pan out. He's changed the name of the company. He's trying to pivot the whole thing. Um, and why is he doing that? Which sounds so absurd and moronic to all of us outside of the company. And even maybe people even in the company feel the same way. But I think that really he was forced to do this because the writing is on the wall. The current generation of people, the kids, the more Gen Z, Y, whatever it is right now, um, they're not using Facebook. Even I don't even go on Facebook, the app, anymore. Like I just don't see any reason to. Like what am I gonna do? Like again, I know that Facebook has its pros. Like they have maybe a good Facebook group feature people use. Maybe they have people they want to stay in touch with, but other than that, like the current newer, younger generation, they're not there and they won't be going there. So Zuckerberg has really no choice but to take the biggest cash cow, which is Facebook, and really try and move into another area because what's the alternative? What's the alternative? Get absolutely decimated and taken over by TikTok, which is a Chinese company, which is owned by a Chinese and operated by a Chinese company called ByteDance, which is absolutely, I think, cancer. I mean, I'm unapologetic about this. It's absolutely cancer. I can't mince my words. It's absolutely cancer on society. It's uh, I don't want to go too hard line on this, but ultimately, it's a scourge on humanity. So, what's the alternative? And I'm not saying Facebook and the Facebook companies are that good. Uh, I just feel like wow, it's really the only alternative Mark Zuckerberg has. What are you gonna do? The company has been printing money. It's been, one of the largest companies in the world, and it's lost, a significant percent of its market cap. It's really one of the worst performing large cap stocks in the market. So it's a shame. About 75%. That's a massive destruction of wealth. Okay, Zuckerberg himself has lost about 100 billion or so in and sorry, not 100 billion, but he's lost over, God knows, I think a few billion, just just from Facebook stock, right? Because obviously he has large ownership in there. So it's eye opening to see this, but um, this is what happens. This is what happens, right? When you have companies kind of reaching late cycle, late stage, especially a tech company like Facebook, which is a social media company, in and out. It's not selling groceries. It's not selling, a product per se. It's just social media, and the only monetization choice they have is ads. And guess what? Ads don't come in as much if the user base is not there, or if the user base is pretty much kind of over the platform and the content. It lives and dies by that. So metaverse is kind of the new thing. Um, the it could pan out, but it's nowhere near where it needs to be. There's no way I'm picking up an Oculus or whatever and trying to get in. VR is great, virtual reality is great, but in its current form, the metaverse is a joke. It's like playing Farmville compared to, you know, games like God of War and even Call of Duty or Battlefield. Like who in their right mind would do that? Only the filthiest of the filthiest casuals, right? So what there's nothing happening like that anytime soon. And if it does, it's a good 10 plus years away. And we know in this world, um, everything moves fast. A company that's here this year may not be here in the next 10 years, or it may be a former shell of itself in the next 10 years. We don't know if Facebook lumps into that. So I am very, very cautious. I am um, it's a very depressing situation for Facebook and obviously large holdings who have large holding of Facebook. But here we are. I just feel like there really wasn't much of a choice. I just hope that if it doesn't pan out in a reasonable amount of time, and in Mark Zuckerberg's alien head of his thinks that, okay, you know what, maybe he has a timeline. Okay, I'm allocating billions to this, every quarter, every year. What's the timeline? If it doesn't work out in the next year, or if it doesn't start ending up getting traction, he needs to pull the plug. And that's really what a moonshot is, right? So who knows? Who knows? I hope Mark Zuckerberg can hit lightning twice. I just don't know um, if he's going to be able to do it.
It's a really good point because companies have to continue innovating. You can't just sit on your laurels and keep playing the same song over and over again and expecting people to tune in and listen. You have to keep moving forward. And I understand what you're saying. I mean, the metaverse was this big play, and right now it just hasn't panned out at all. And Yas was asking, he's like, what if in a few years this sort of things becomes mainstream? And I clarified if he's talking about something like Ready Player One, which is like where everybody lives in virtual reality and doesn't live in the real world. I mean, obviously, if that happens and the metaverse really pans out, I think that'd be good for Facebook. But I kind of have to agree with you. I don't know if that's going to
Yeah,
happen even within the next 10
we'll
years.
never get there. We'll never get to Ready Player One in our lifetimes. You can take that to the bank. As far as metaverse being a way to communicate, to have consume content, consume entertainment, those things could happen. Uh, Sooner. Obviously in a few years, but this isn't happening next year. This isn't happening the year after. It kind of reminds me of the crypto thing where like people are like, Riz, look at this crypto, look at this build out. Like, dude, look at what can happen, like look at what NFTs and look at this project and that project. I'm like, uh-huh, yeah, okay, all right, cool. Yeah, I get it. It's pretty neat, awesome. Okay, come back to me in 10 years. Because we don't know if it's going to pan out. So a lot of these things are just projections. They're just conjecture. They're just things that we, come up with. It's like, it's like fairy tales at some point. Can they pan out? Sure. Maybe there's some truth and viability to it. Sure. Um, is it going to really be like how we think? The more likely scenario, it isn't. You know, if I had $1 for every time someone thought some idea would end up being a gold mine, well, I could. Actually, I don't really. It wouldn't make any difference, actually. But ultimately, the point I'm trying to make is that, we're very far away from this metaverse thing happening. Just like how I remember the whole nonsense of buying yachts in the virtual world and metaverse. Look how far away we are from it even being, you know, 1% viable. Like, what's the point? There's no use case for any of it. Um, if I put on a VR headset and consume certain games, that they're amazing. They're great. Very limited in certain ways, but they're great. But to actually get in and play like a little Farmville type of game, or like have a fucking video meeting with a animated 2D avatar cartoon looking, it's like, for the rest of the gamers out there, it's kind of like Second Life. It's kind of like PlayStation Home. Maybe you guys remember that, from very many years back. Both duds, both projects closed down. Both didn't pan out. Why would I want to see, and work with an avatar of my coworkers and my team when I could just get on a fucking video call? I don't want to log in and put this shit on my head and then, oh, hey, wave with, do a little, Fortnite dance in there. I don't want to do it. I don't want to do it. And maybe I'm not Gen Z. Maybe I'm not Gen X or whatever the hell the generation is now. Maybe it's not catering to me. Sure, that's fine. But I would bet that it's not sustainable. People want to play VR. They want to get in on it. Well, guess what? They'll play the fucking game. They'll play the next generation stuff. They'll play the stuff with the amazing tech. Right now, the metaverse is a sick joke and an absolute slap in the face to Zuckerberg, you know, conducted by himself. And the biggest slap in the face, apart from that, is the destruction of the stock, the investors, institutions. People have virtually slapped Zuckerberg, and it's obvious when you lose 70+% of your value in a stock in less than a year. It's an absolute disgrace. Like if Riz International was a public company and it lost 70% of its value in less than a year, and it was like $1 trillion company, I I'd frankly be embarrassed. I would be embarrassed to show my face. I'd be embarrassed to even be out in public. Because how can you get it so fucking wrong? And I get it, markets are brutal. And when something drops 20-30% and things are fine, it's not the end of the world. It's not your fault sometimes. But when something like this happened, when I, aka, if I did run Facebook or Meta and spending billions every quarter and there's nothing to be said for it, I think I'd have to like hang my head in shame, you know? Um, so that's something to think about, right? It's absurd to me. It's absurd.
All right, Lloyd has a question. He wants to know if we have any thoughts on Activision, ATVI.
Arbitrage play, complete arbitrage play. There's some risk with this. I know Berkshire Hathaway, Warren Buffett's in with a big arbitrage play. It's very much down. Um, I don't know what was the buyout price, like 74, 84, or something like that. Um, but yeah, because it really popped there right in the start of the year when it was announced. Went up to like 88 or something. I don't know. See, the issues with this is there is still some hurdles. We knew it's going to take over a year. Uh, okay, over 90. Yeah, there's a big arbitrage play. I feel like it's tough to say. As someone who follows, this stuff closely, who's also a gamer, has been for their entire life. I don't know. There's a lot of hurdles, especially in the Europe side. Sony's making a big fuss out of it that, many IPs, because Activision Blizzard, which is one company, has so many IPs, has so many different games that are multi-platform. But the risk is that if Microsoft closes deal, potentially they might make it exclusive. You know, it's tough to say. I think it's tough to say. And if there's even a whiff of rumors or some credibility that this deal is a 50-50, the stock price will tank lower. And the only solace is what spin and PR Microsoft can do to keep this deal um, alive. I had my doubts even when it was announced, because such a big company will be one of the largest acquisitions, and Microsoft's consolidated the gaming industry quite a bit. They bought ZeniMax, which owns Bethesda and other studios that develop many different games, and they're potentially could be exclusive. So having Activision as well, uh, under their banner, there is some risk of competition and monopoly, uh, potential monopolization. So this is the headwinds that this deal faces. I personally don't really want to play that arbitrage risk. In other news, Call of Duty did that released just last week. It's been 7 days now almost, but they have done approximately $800 million in revenue, uh, not profits, just revenue, aka sales, just on Call of Duty Modern Warfare 2, that released, and that was in 3 days. So in 3 days, they did 800 million. Um, so it's interesting. Now it won't be factored into this earnings coming up in the start of the month, in a couple, few days, I think. Um, but it's very interesting. It's a tremendous feat. One of the best selling, I think, Call of Duty uh, in history, if I'm not mistaken. But yeah, 800 million. That's sizable.
I'd take it. I mean, if someone wants to throw me 800 million, I'd take it. Yeah, it looks like earnings release for Activision is going to be after close on Monday, so that'll be interesting to keep an eye on. But like Riz says, those numbers won't be included, so we'll have to see what the sentiment is from those reports. If you're into Activision, that sort of thing. Of course, I'm a huge Blizzard fanboy. I have been for a long time, but that was well before they were acquired by Activision. So definitely a lot going on there. We've been at this for quite a while, actually. We're running up on that hour mark. Like we said, Riz, you're going to be kind of cautious going into this week. If you were going to advise somebody, what should they be looking for in the market this week to get some idea of what's going on? Should we be looking at earnings or more announcements from the Fed? What do you think is going to be the big catalyst this week?
Yeah, yeah. There's still some earnings coming in. Most of them over the last 2 weeks have reported. We've made it through. The market pretty much absorbed it. Not too bad overall. They're not catastrophic. I think we still have some coming up, like you said, Activision being one of them. Um, but after this week is really going to slow down in terms of earnings releases. I feel like heading into the year, I don't think we're going to see too many major shakeups in the market. I think we can continue. I don't see us going to 4,300, 4,200. I just don't see that. I mean, I'll gladly be wrong, but I just don't see that happening. I think if I had to make a decision for the next couple of weeks, maybe we see 3,600, 3,700 area, sooner rather than later, uh, because again, I will gladly be wrong, but it's also going to come down to some of the economic data. When inflation continues to come in at, what the you know Q3 GDP comes in at. These things will be very important.
All right, there you have it. Thank you, everybody, for coming out. Really appreciate it. Excellent questions, as always. And we will see you in the market on Monday.